Well, good morning, 19th of February, 2025. Apparently the stream is flowing. Everything seems to be working. I'm working, which is a good thing. It's 8:03. All times referred to or that are visible on my screens are Central Standard Time. That's important to know. The purpose of this stream is my virtual private trading journal, or private virtual trading journal, take your pick. The idea here is that I don't multitask well, so if I am trying to keep up a journal through the day, which is, I think, very important, doing screen snaps and typing and blah, 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 diverting my attention away from watching the market is not a good thing for me. So my thinking here is that I obviously have the video to see everything going on before me, and my voiceover, or this narration, whatever, gives insight as to what I was thinking. I stream it to YouTube because it provides, I can easily review the stream on any device, first of all, from an easy point of view. And second of all, it provides transparency and accountability. I mean, you can't, every movement on Bookmap or whichever screen is completely captured, right? And I don't take any trades on this account off the stream. So I think it provides a real good accountability and holds me accountable. The idea, remember, is that it's not for financial advice or trade advice. And one word about that trading advice is there's a substantial delay. I've tried to figure out how to get rid of it in the YouTube, whatever you call it, studio thing, and I don't see the setting, and I haven't really Googled it or looked too hard, but it's at least a minute, sometimes a few, sometimes 20 or 30 seconds, but sometimes it's up to a couple of minutes. Yesterday, I noticed it was like a couple of minutes on the other computer that I monitor the stream with. So maybe it's not the case for everybody, but that's important to know. So if I'm talking about a trade or an entry, or I put on a trade, it could be substantially later. So it would be, I could be in and out of a trade before the stream even said I was in it, which is, obviously dangerous. So be very careful there. If I can figure out how to make it instantaneous or close to it, then I will not I will not add that to the disclaimer. But anyhow, there's also a disclaimer in the description here, so read that. And let's talk about what's next here. I think I covered that stuff. The numbers out this morning. There is a Fed minutes at 1300. There's several other two-star events earlier this morning, but that's it. And yesterday was just the big publicity hound stuff. I guess is the new normal. Wow. Anyway, so that's that. I have to get used to that. Those are the only numbers out. And as far as the pre-market goes, well, what have we done? Inventory is about 50-50, I would guess. Here's the IRT. This is the Renko ES. Here's our open. Oh, we're about 50% volume under, right? Any trades above the open would be considered long inventory, and any trades below it would be considered short inventory in my thinking, which comes from the old market profile stuff. This is the NQ, and this is the micro composite of the ES, and this is the volume profile for the ES. H contract. So The way the micro composite here works is this is just the RTH trading session only, and these are daily bars. Wherever price overlaps, I draw or continue to draw a volume profile around them, and by so doing, it automatically generates a micro composite VPOC, a high and a low, value area, etc. And of more important, well, not more importance, but these red and green lines are the high and low volume nodes from this market micro composite volume profile. And these red and green lines are pushed automatically to Bookmap, which is my execution platform. These price levels, session prices, are also pushed to Bookmap. Now what we're looking at is yesterday's RTH period and in this current overnight session, which we're in right now. So if we had to imagine what our open type is going to be, how do we determine that? It is based on where we are likely to open as it compares to where we closed the RTH yesterday and the previous RTH or yesterday's RTH range. So here's the open. Here's the close. We're likely to open down here. So we would be lower and within range. So it's lower. It would be lower in range is the open type that I'll expect. Now that could change, of course, but in the next 21 minutes. So here's the Bookmap, and here gives you an idea of what that overnight looked like. This was the drama around, here's the close, and here was the open. This is that drama around the speech and whatever that was, and then, back to reality and down to here. So there's our open. There's that bunch of, there's this volume above the open and this volume below it. And here we trade right now. So looking at that open type again, we look to be, here's the, where'd the close go? Well, the close is buried underneath of this level right here, but the close is here. And the overnight range there's the high. The yesterday's range is high and low. So there's the high and the low is down below us. So we're lower in range. Now, these are the columns that this is the micro composite column where I manually enter these BPOCs and naked volume points of control, etc. And my workflow is as follows. In the case of the micro composites, it would be yellow with red text if it's current, and I change the text color to black on these flags for stuff that are stale or just recently crossed, but I still leave them on the chart. There's a current one that hasn't been taken out. Well, it says it has, so maybe I need to revisit that one. That should be, if that micro or naked volume point of control from the 16th of December has been hit, then I need to change those text color to black or remove it. This is the high and low volume nodes, which are, I mentioned, are pushed automatically from the micro composite chart. This is the full session volume profile. This started plotting at 1700 last night and will continue through 1600 this evening. It's not the ETH, it's the full session as it's in the title. This is the RTH session, which will reset today at 8:30. This is chart volume profile, which just plots what you see on the chart. If I scroll off like that, you see this changes down to a little bitty guy there. That's because it only plots what data you see on the chart. This is the column here where I enter data that I feel is important. First, I change the title of the column to our open type. So this looks to me to be lower in range today. We'll see how we open, but that's what I'm expecting. then I enter the statistics based on the open type from the statistic study next to their relative price level. I also flag the migrating volume point of control for the day in this column. And this naked volume point of control indicates the POC at close yesterday's RTH. That's the most recent auction naked volume point of control. This is the overnight volume point of control, previous high, blah, blah, blah. This heat map, now there are no indicators on either my book map or my IRT. There are only price levels and these basic POC for full session and RTH. And the POC is nothing more than the price at which the most contracts have traded so far in the session, meaning that 61, 51 half, the most number of contracts have traded so far in the full session. The minute this number goes somewhere else, this yellow line will move there. That's all there is to it. The closest thing to a calculated indicator, I guess, that I do use is the VWAP for both Globex and RTH, and that's the volume weighted average price. The initial balance low and high are these. You can't see the flag here. It's under these current ones. But that's just the high and low of the first 1 hour of the RTH session. It's called initial balance because it's an old thing from the market profile days. But it's just the high and low of the first hour. The POC is just the price at which the most contracts have traded. The mid is the middle. It's real basic. And these different colors, or this gradient of stuff here on the heat map, reflect the indicated levels of liquidity in the book. But as everybody that's alive and trades the markets, I think, on any more than a one-day basis, knows that this is just fantasy land. I mean, they come in and out and jump up and down, and just like this bracketing algo here. This crap started about 6 months or I don't know how many months ago. This bracketing algo will stay all day. They come on at 7, they turn it on at 7 o'clock every day, and it'll stay right there. No, that's just crap. It means nothing. They never trade into it. It's just annoyance, I guess. I have not figured out any other reason for it. It's got to be a serious player. Right here's 700 contracts right here, right? So in order to be able to put 700 contracts in the book, you got to have that much account. Means it's got to be somebody serious. It can't just be me, for example. So we have the levels. We have why they're the levels. And now the next thing to think about would be the statistics. And so what we do there, I hope I was on the right screen, but maybe I wasn't when I was talking about bookmap. Anyway, guess it doesn't matter. This is the statistics study in IRT. And the way this works is, once we have an open, IRT will automatically highlight the correct column. In our case, today will be lower in range, I suspect, for the reasons I stated. It only compares the upcoming open to the previous close and the previous RTH range. Trump could fall over dead. The world could blow up. Doesn't matter. Those are the only two criteria that affect the open type. Now, this study looks back at 2005 days. Of these 2005 days, we opened 591 of them in range, lower in range, okay? Of these days, the overnight volume point of control was revisited 84.4% of the time. So, overnight volume point of control, 84.4. And that's exactly all there is to it. And now the previous RTH high, well, that's kind of interesting. The previous high is 53.3%. I'm going to refresh my data here just to make sure these levels are correct. I'm sure that they are, but that's kind of surprising, right? If we open down here, the most, the highest probable single statistic is typically always the overnight volume point of control in all four open types. 84%. When we open down here, well, it ought to be obvious we're going to get through the previous high at 53% in order to get to the overnight POC, right? So these are statistics, and they can be skewed for various reasons to do with how yesterday played out. Because remember, these prices have nothing to do with the open type. The only thing that does have something to do with the open type are the previous high and low and the previous close. That's it. The rest of them do not. And where we traded overnight doesn't have anything to do with this. So we traded up here, and I've got to look at that because I'm afraid this doesn't look right to me. Anyway, I'll continue on here just to give you, reinforce the idea. So the overnight low, let's say, as a statistic, typically the second most 83.6. Typically, the second most probable is the overnight mid, which is here, and that's 84.6. No, that's not right. What am I? I'm sorry, 83.6. There we go. I'm thinking about it. You see, why I try this, why I'm using this stream as my journal is I don't, I'm talking and thinking, or even worse, talking and typing, talking and screen snapping, and thinking don't all work for me. Overnight low. Well, the overnight high is 70. Overnight low is 66.8. And that's just a little bit. Let's see if we can get that to fall into place there. There we go. Okay, so I'm going to refresh the data on IRT now just to make sure everything is correct. I want to be sure of that. Seems a little goofy. Well, on the charting, it is definitely showing that the way you this is kind of interesting. The way you refresh the data on IRT, just right click the chart, data, full download, boop. That's all there is to it. And then you'll notice up here, it's going to import the bars and do all that stuff. And of course, like pretty much every trading platform, except I think Sierra does its own data. This uses DTN IQ feed for historical data. So does Bookmap. And DTN is a real good, clean data source. Well, so it's still working on it, but okay, I'm going to get this snap off. I guess while we're waiting for this thing to quit thing, it's done. Okay. Man, I'm so sick of all this crap. iPhone updated and all the icons and the mail changed, and I deleted Google account. Oh, God. It's a mess. Ain't a pretty picture. Okay. Now, what I have just done here is send a snap to the TLab, and I'll talk about that in a minute, but I want to see whether these prices have changed or not. No. This will be about 30 seconds, and we'll see if these update. We're opening in 7 minutes. One of the things while I'm waiting for all this to think about itself is that's important is it would probably be good to be able to trade today. And what you have to do with Bookmap in order to trade is first, I use multi-brackets. Today, since I'm easing myself back into the market, I'm going to be using a 2-lot risk neutral package, which is real simple. 2 contracts. They have to be even numbers. You'll notice that they're in 4 even numbers. This is a 4-lot, which I typically trade. And this is a 2-lot. But the stop for the entire package is at, in my case, I've chosen and back-tested 12 ticks. The first risk-neutral target is for this half of the package at the positive equal to the stop. Positive 12 ticks, 2 contracts. At this point, the trade is risk-neutral, and the worst you can possibly do is take a scratch. This is the second profit target, and this is the third. 24 ticks, 48 ticks. And this is for a 2-lot. Same idea. Both contracts, 12 ticks. One contract, half the package at 12 ticks. Second runner at 48 ticks. And that, because it's only 2 lots, I have to do some trade management on that. I'll have to think about whether I want to do that or not, actually. Been kind of on tilt emotionally here since a big drama happened last week. I might just ease back into it with 2 lots. I think that's probably prudent. Anyway, so once you've selected your package, on any way you want to trade with Bookmap, you have to activate the trade control panel. Click that padlock. Now you have to choose a way to interact with the application, whether you choose to interact with the mouse by the chart, which means that any place in this live data window you click, you've entered an order or a trade, depending on whether you right click, left click, all that stuff. The dome means you only can activate or interact with orders in the dome. And both, obviously, both. I initiate my trades with a keyboard, so I choose to manipulate orders only on the dome because I believe that reduces the possibility of error, which is a detraction from any calculated, any determined edge. If you accidentally click over here, and I have done that when I used to use both, trying to move a target, for example, or trail a stop up and grab just on the wrong side of this line, boom, there's an order or a trade, depending on where you clicked. So that was an obvious error, and I don't do that anymore. Dome, confirm it's the package that you selected in multi-brackets, or you can set your stuff up down here. And then I click this again. Now it stays active, it stays green, the padlock's unlocked, but I get the real estate back, and I don't trade my P&L. I don't see what's going on over there. So that is that. And we're going to open here in 3 minutes. And this has all stayed the same. So, and looking at the IRT again, yes, here's the high, and there's the overnight volume point of control. So it is correct. Previous high, overnight volume point of control. These are the price levels which are pushed to Bookmap. So yeah, crazy. That means that that is where the most volume traded. So the bulk of the volume, even though it looks, you've got all this trade down here, the bulk of the volume last night is long, above, well, I don't know if I could say that. That's the POC, so that's the mean, right? This little bit is above it, and this is below it, I guess. I don't know. That's interesting. If I could remember how to turn on the info box over here on the market profile, it would say the number of TPOs, long or short. I think there's a way to do that somewhere, but where is it? No. No, that's not it. On any other chart, if you click the plus key, it turns off and on the info box. Anyway. All right, so bio break time. Oh, going to open in a minute. I'll stand by. I hope I'm doing everything. The stream seems to be trickling along. That's just fine. We've got about 3 seconds to the open. Oop, there we are. And now I will start to flag the migrating VPOCs. And I do that like this. And why do I do that? Well, you're correct in assuming that the yellow brick road here, the yellow brick road, this line, or the POC line, will continue to migrate up and down and print all day. But as the day progresses, this will scroll off to the left, and I won't be able to see where it has been. And my idea here, whether it's right or wrong, it's my idea, is to have all the data that I think is important for making a trading decision right here in front of me on the hard right edge. So I don't have to scroll back and forth. There's enough of that anyway. But if I want to see, if it looks like we're approaching above or below a a migrating VPOC, previous VPOC, then that's what we have. And we open to the lower end of well, this was the overnight low. And I didn't move the flag down there, but I did now. Remember that with any of these overnight levels, they are changing until they open, right? As long as the overnight's trading, that's what's happening. We've taken out that naked volume point of control, so that's off the table, which is a high volume node, makes sense. And we're right at the bottom of our overnight range. And what are they going to do with it now? Last night was a pretty big sell-off, actually. Right after the speech, London kicked in and away they went. Here we have the full session the full session POC migrating down and joining up with the RTH. And, if you're really excited to trade, you got 4 handles. You got 4 handles at top here to deal with. These kind of days I refer to these open auction type trades as retail soup. Because so many retail traders just can't keep their hand off the mouse. They don't realize that there are 3 positions in trading: long, short, and flat. And if you are really a statistical or more a professional trader, you're waiting for the opportunity, the setup that you have pre-vetted and that you have previously determined has a positive edge, and you spend a lot of time waiting. Look at this noise. Now, this is one of the things about Bookmap that I sometimes let myself fall into a problem with. I try to keep it scrolled as long as I can see the price action to where I can see the grid lines here, because I lose sense of scale otherwise. Like when I scroll this out, when I'm trying to see a bigger picture and I've got these on 1 point increments, like right now it's half. It's still pretty hard to get the idea around that. And one of the things that I didn't mention to do with my trade plan, or a couple of them, in addition to only taking setups which have a vetted edge, I have a range requirement, which says that I cannot, an entry is not valid if there is, or I should say, for an entry to be valid, there must be a unobstructed path from the entry to the risk neutral scale. So there's that. See now how this line has jumped. The IB line has moved ahead of the flag. That is completely expected behavior, and it is an idiosyncrasy of Bookmap. This line and this flag are both driven simultaneously by data from IRT. The difference is on the cloud node column, where I have these price levels pushed from my computer, the smallest refresh rate is 1 minute. Whoever the people are that coded this indicator, which I bought from Bookmap of this line, obviously refreshes it quicker. Maybe it looks to me about 30 seconds, but I guess it changes. So now again, there's a spread, and in a second the flag will catch up. At first I thought, what the hell is this? But then I worked it out and observed it and looked at the cloud note thing, and the smallest refresh rate available in cloud notes, unless they've changed it recently, which I never bothered to look, but it doesn't bother me anymore, and there you go. Okay, so I've got all the little chapters in there, I believe. Nope, I didn't. I missed one. I missed the levels. I'll put that in later. All right, so this is now a ramped up urgency for trading, I guess. I'll have to talk about that in a minute. I want to turn this other stream on the other machine to make sure it's okay. Well, seems like it's chugging right along here, so we'll see how long it takes for the delay this morning, just out of curiosity. Oh, that's 20 seconds. Only 20 seconds there, so that's not a problem. I don't guess. Trying to get the sound, the mic, all that stuff without any plosives. Yesterday must have just been my computer, I guess. That computer that I monitor this on is my older workstation, which is typically email and, the Discord, TLab or Static, whatever. Don't think I said anything about the TLab or Static, but I can do that now. The TLab is a place called the Traders Lab. It is a Bookmap Discord chat room, and it is completely free. You don't even have to be a subscriber to Bookmap, which is, pretty phenomenal. But obviously, it's a marketing instrument for them. But graciously, they don't ever solicit for, or require subscription or any of that stuff. Now, within that Discord place is one of those chat rooms is called the Traders Lab, started by a guy named Tom B., a professional, successful trader with 45 years or more now, 46, I guess it is, years experience. He has a view about trading as a business, risk management, using volume profile, things that relate or resonate well with me. So I kind of hung around there when I first bumped into it a couple years ago. And then I was pleasantly surprised to notice that absolutely nothing is for sale. In other words, Tom is never saying, that indicator's on my website, or I offer this mentoring or any of that. And as I already said, Bookmap never solicits for any kind of, for anything, even, subscribing to Bookmap. All the resources there are free. Tom's dialogue, he doesn't call trades. He interacts with the chat a lot, and he streams once a day from like 10:30 to 12 or something like that. It's kind of hindsight, rearview mirror stuff a lot, so I listen quite intently early on, and I don't do that quite so frequently anymore because I tend to think that live, real-time stuff is more meaningful to me. Maybe I'm wrong, but that's what I think, or how I feel now. But the important part is he's a genuine, professional, successful trader. And nothing is for sale. Like any, so many. I don't think I've ever been to another site like that. I don't think I've ever been to any site by any internet person, whatever they are, guru, personality, influencer, whatever, where something isn't for sale. My indicator, my website, my mentoring, my whatever. The content may be good, but still the ultimate goal is to sell you something. Not so with the Traders Lab. And I do not make that recommendation for any of the other Bookmap Discord chat rooms. I certainly haven't visited all of them, but the other couple, one or two that I did visit, 3 words out of the guy's mouth was, this indicator's on my platform, and I offer mentoring for $1,000 a month and whatever else. And I just immediately shut him off and never went back. So I suppose that Bruce Pringle's presentations, which I'm not familiar with when or how he does them. He is an employee of Bookmap, and so consequently he's continually trying to showcase new indicators and new this and new that with this, absolutely marketing Bookmap. The intent is to, buy this add-on or do whatever it is. But he works for Bookmap, and that's fair. That's perfectly fine. I'm happy that they do that. I have to subscribe because I trade with Bookmap, but I do recommend the Traders Lab and Tom B. Now, another good part of that place is that within it is a good collection or core group of serious-minded traders. And as a subshoot of that now, there's one of those more prolific and good trader, coder, statistician is a guy named Rod, who has is developing an app, and which I'm fortunate to be in the beta group version. And there's a subset or a Discord associated with that called Static, STATTICK, one word. But it's not public, so there's no recommendation or link in the description here. But at some point, whenever he said, okay, this is going to ready for public consumption, I'll put it in there for sure. That's it. I don't recommend any other site. I get my numbers off of investing.com every day. It's free. You can filter it for, what events you want, what country you are, what time zone you're in, all that stuff. And I suppose there's a whole buttload of them out there. I know a lot of people use something from Forex Factory, but I don't. I have a bad taste in my mouth for Forex, basically, because I know something about that from the behind the curtain, and it's a pretty nasty world. Not that Forex Factory is part of that, but they make their money that way somehow. And investing.com is, there is advertising, absolutely, but I just, you can easily filter it out, and I just do a screen snap every day, and I post every day the numbers about 6 o'clock into the TLab just to kind of help contribute, and I post the this chart snap every day at 8:20, just with a look back of the recent trading back a few days, and all of the numbers and, settlement and all that kind of stuff, just to kind of contribute a little bit if I can. So that's the TLab and Static. Now, and, it's easy to talk and do nothing because we've now got a walloping 5.5 point range. There's no news. Let me look again. I mean, there were 2-star events like building permits and housing starts and that stuff, but that's all at 7:30 and had very little impact. Atlanta Fed GDP now is at 9:30. It's only 2-star. The only 3-star, and there's a 20-year bond auction at noon. At 1300 is the FOMC minutes. So, beats the hell out of me. Yeah, I don't know. Maybe the orange one is going to speak again. It seems like he's pretty excited about a lot of publicity, which is not a surprise. That's been the story of his life forever. And the people around him, between him and Musk, Musk is also a publicity hound, so it's pretty relentless. I mean, and I'm not making any political statement. I am just so sick of hearing about politics and crap from the elections that it would just be great for me if they all shut up and went away. Or if I could figure out a way to filter it all off of YouTube and everywhere. That would be great too. I don't care. So yeah, there's there is retail soup. We're in a 6-handle range or 5.5 point range. Oh no, wait, I'm sorry. It's really expanded now. We're in a 6-point range. Wow. And we're right at the bottom of the overnight. So now I guess what I will do, since we're well and open and maybe interesting, is this is yesterday's RTH, yesterday's overnight. You can see how that traded after the speech, down, down, and down. And here's our open today. Now what I will do is I will change to RTH only, and it's pretty complicated. That's how you do it right there. Now this is yesterday's RTH, and here we are today. Again, these are Renko charts. And I'll do the same here. And now we're plotting RTH session only. And this is always RTH, and this is always RTH. So this is the market profile for the NQ ES. And this is the micro composite, which I talked about in the pre-market. You can see, and I scrub the holidays. So this is Friday, Tuesday. No, I'm sorry. Friday, Tuesday, Wednesday. Here we are, this little guy over here. I scrub the holidays, these half-day things, just because I don't want my data polluted and I don't watch the market. I don't need that kind of noise. Light volume and half a day, this and that and something else. I don't, if I was focused on trading overnight or the ETH, then yeah, that would be worth a valid thing to do, but I don't, so may start that, however. Oh, I refreshed my data and now they snuck this little thing back in. Do you see this? So what I will do now is scrub my data. That's why I was having a problem on the micro composite. I forgot about that. I have a holiday filter that's supposed to work, but for some reason, sometimes it doesn't. Now you'll see that it scrubbed out those days, and here we are. So that's why I was confused over here. Friday, Monday, Tuesday. Friday, Monday, Tuesday. I'm sorry. Friday, Tuesday, Wednesday. This is us right here. That day is scrubbed out. So there we go. And I don't know why that is. I have it set up to automatically scrub holidays or not recognize them. And sometimes it does, sometimes it doesn't, but it's certainly not a problem to fix. And back to the market. I'm just kind of wandering on here, babbling, because this is just exactly retail soup. All those poor people who can't keep their finger off the mouse are getting hammered. Tom B has a saying, think like retail, don't trade like one. Kind of cute. This is kind of a market that looks like they're waiting for something, but what that is, I don't know. We're already up to 9 o'clock almost. So, yeah. The market is definitely consolidating and waiting. That's about the most perfect profile you ever want to see, with kurtosis at both ends. And yesterday was held pretty much that way until they broke it out a little bit. And let's see what today brings. This is called an open auction. It is the bulk, or the majority of the trading days are rotational as opposed to trend. So there's that. Well, here we approach, well, no, actually, we've crossed over 9 o'clock. So that brings us to the IB statistic, or statistics, statisti. Anyway, first of all, the IB again is just the high and low of the first 1 hour of the RTH session. However, there's a widely known statistic associated with the initial balance. And remember that it is not in play until 9:30 because these continue to move up and down until 9:30. But at or after 9:30, when the statistic is active, over 97% of the days in all open types, either the IB high or the IB low are exceeded by price in the balance of the regular trading session for that day. That's a pretty significant statistic. Now, Rod, who I talked about earlier, the guy who started Static and whatnot, also did some statistics, and he determined that the high or the low of the first 30 minutes has about an 89% probability of being exceeded by the high or low in the second 30 minutes. And that's just happening now at the low. Let's look. Not yet here, right? There's 9 o'clock. So it hasn't been exceeded here. Well, and they didn't do it down here yet either. But anyway, you get the point. The high or the low of the second 30 minutes is exceeded by the high or is exceeded by price. So in the TLab, and sometimes I refer to it as the IB30. And the old original real statistic, well-known statistic around the initial balance is referred to as the IB60. So sometimes I might use that reference, and I want to make sure it's not misleading, or that I, when I review this, I haven't forgotten. But that's the thinking. Now, so far, they've just gotten up there and almost and down here, but didn't do it, right? So, and once, it's not exactly there you go. Now the IB30 has been satisfied to the low. And it can happen several times in the next 30 minutes, but, because now the IB will move here, and then it could go again, and then it could go again. But it isn't really a statistic anymore, because the statistic we were looking for is for the first 30 minutes. And this IB will now change down here, so it doesn't matter anymore. But that is there's 89%, and it happens just about every day. Pretty hard to trade, but you'd be kind of disappointed if you were looking for the high and then got stopped out and now the low happened, right? I think you're better off to just be sure that you're trading in a tradable environment, that there's enough range. In my case, I talked about the range requirement, so doesn't exist. Yesterday didn't exist. Pretty limiting and pretty frustrating. Well, on the bigger picture here, we're actually trading lower. We got, if I can get this right, we got lower highs and lower lows, right? So context is moving lower, and they're down now just past the previous value area low. Not that that necessarily means anything, but just an observation. And that would be right here. The difference between the value area low and the developing value area low or high is developing is in the current auctioning session, and the value area low or high is the previous auction. Now, when I had this on full session, this value area would have been the ETH or the period. But when I switched to RTH only, this reflects yesterday's RTH value area low. And as you can see, here. So that's why I kick those over together, because I like to be comparing apples to apples. And at this point, the value area low for the overnight isn't necessarily that important to me. Maybe I'm wrong, but that's my thinking. Oh, there they come out of chute number 4. What was that? What the hell time is it? 9:32. Well, so there we have the IB statistic, the IB 60. And as I was busy having a drink of tea and turning around, this big flush happened. Now, lately, we've been, where am I? Okay, I'm on the right screen. Lately, we've been looking at these flushes as reversals, but when you're in an area that has got no direction, I don't know, there can be a reversal, and it doesn't still qualify as a qualified trade or a vetted setup. What this was is this sweep is a liquidity vacuum or stop cascade. There's a lot of ways to talk about it. This is what I believe and what I understand to be the truth or the facts. So here, let me see if I can get this right. Here's the day, right? Okay, there's the day's trade. What is that? That is a tight consolidation around 7 handles. Where do you suppose all the stops are for everybody that thought they were going to go short? Equally, all the stops for everybody that thought we were going long are under the IB low. All right? In this case, someone chose to throw an order on big enough to clean out all of these levels of liquidity. And how does that work? Well, if your stop is right here at 36.85 and it's triggered, it turns into a market order. By definition, a market order gets filled at the best possible available price, which could be at 42.30, right? 42.5 or a quarter, actually. Well, 42.5, yeah. It's about liquidity, and that's what they do. They clean out all these orders all the way up, and these are stops that were resting along here. That's the way the market works. It goes up to go down, and goes down to go up. You have to remember, I guess, while we're on the subject here, I have to remember that this is a zero-sum game, futures market. Forex is just a rigged casino. The stock market is a pool of liquidity. In other words, when I IPO my company, I have a pool of however many million shares, right? And you can trade those shares long as much as you want. If you can borrow them or you own them, you can short them as much as you want, but they are against a liquidity. They are against a pool. If I buy shares long in a stock, I'm investing in that stock. Nobody had to sell that. That comes from the liquidity. In futures, that's why, and this is why they call them contracts. It's a contract between a buyer and a seller. So for every entry, for every winner, there's a loser. Or for everybody that makes money, somebody lost money. Now, stop and think about the advantage or the edge you would have if you had unlimitedly deep pockets and statistical modeling room full of quants, you have a hell of an edge. And we are, because I'm a retail guy like everybody else pretty much, or the majority of people are, we don't have any of that stuff. And it doesn't take them long to know where, it doesn't take a rocket science to know where stops are. Retail can't, most retail can't short here and put their stop out of the money over 50 or 45. And once they have built up enough and they have a large enough order that they need to fill, they do this. And it's that's a stop run. So for everybody that's sold short up here, somebody bought. How do you make money if you buy? You sell higher. If you're short and you're retail, how do you stop out? How do you lose money? You have to buy higher than you sold. That's it. I mean, that in a nutshell is how the market moves, and the difference between higher time frame or deep pockets or strong hands or whatever euphemism you want to apply to the other side from retail. That's why the market goes down to go up and goes up to go down and goes down to go up and goes up to go down and goes down to go up and goes up to go down. That's exactly what it is. So what you need to do, or what I believe you need to do, is have a vetted trade and a vetted setup to try to take advantage of the few non-random movements in the market. Don't try to predict anything. Have a vetted setup and anticipate the move. You never know when this move is going to hit. I mean, you can anticipate it, but what are you going to do about it? You know, and it's so fast you couldn't even short it. All right, not quick enough. I guess you could short it up here maybe, and then you're right at a level, and you're not even at your scale. So that is truly what I believe, how I believe the market moves, and the dynamic that needs to be understood in trading. So we approach the turnover from the RTH1 to RTH2 period. That's 135 minutes. We're definitely in a consolidation period here. This little fractal is just from nothing to the top of the range. I'm just under settlement. We still have these two, particularly the overnight volume point of control, pretty high statistic above us at 10:30. And once again, there is no range requirement satisfied. Don't know what to think here. Gets real tiring just standing here watching this thing go. And it's easy to see this kind of action and think, ooh, opportunity, shiny. but the reality is it's 2 points across the whole thing and an obstacle in the middle. So, Jesus, 39 to 41. And to be honest about it, there's no range from the IB continuation either. So this is just, I got to do some soul searching here in my homework time to think what to do in these situations. When the market is all tight like this, and there's clearly not a 3-point range anyplace, what do I do? Can't scale down in size unless I were to drop down to the micros. Change the risk requirement, but that are the risk neutral package setup. But that is getting further into the noise, and what I mean by that is to lower. Let's maybe look at it over here. Okay, this is the 2-lot, the basic package. So that's the stops are 12 ticks and positive 12 ticks. So what could you do to get down to the range requirement? Well, you've got to drop this down to 9 because obviously you're not going to get half a tick somewhere. Point-wise, I mean, I'm just thinking in points. So say if you drop this to 9 and 9, that's 2 points. You would be within the range requirement, but just getting further into the noise. I think the general conventional wisdom is that's the wrong direction to go. So I need to think about this. What? Oh, great. No problem. You don't have to tell me. When I see. It's still making noise. Well, if you wanted to be real technical, this is a bar, which is not formed yet, but this is a This is a range. So this would be the breakout, retest, and then continue. That's called a bar trade, but there's no way that that's on the cards today at this location. In my opinion, we're going to go up for that overnight volume point of control probably. And not be on the trade, and certainly not jump on a FOMO. Now, these here are all of these stops. See this liquidity that was laying in here all this time, and it got eaten right here. This is the stops from all these guys that are looking short, trying to pick the top, I believe. And it's still not 3 points. Jesus Christ. Here. No. This is pretty annoying. Going to get that stat, though. Absolutely. As expected. And here's the part that really... This is the part where the internet gurus and RMT, rear view mirror trading, is so dangerous. Well, there you are, you know. We were in a tight range. We broke out. We tested back down to the VWAP just below. I got long right here, and I'm long all the way. Well, no, I'm not. And tell me what you thought right when the market was right. Tell me what you thought right there. You getting long? That's the difference. That's the difference between the hard right edge and the typical internet gurus. Now, here might have been something you could think about. You know, basically internet or the IB continuation trade. But as what happened with Static, Rod thought that was the case right here and got a full stop. And now you're on it. That's the difference. That's internet gurus, rearview mirror trading in action. As compared to the live real market on the hard right edge, you know. And I guess they're just toying with that statistic up there. Or reloading, or they're going to get everybody faked out and hammer it back down again. And, this is certainly not something I'm going to do. I don't trade breakouts. I've said this many times. For me, it represents FOMO. And I'm fully aware that breakout trading or momentum trading is a valid strategy. Richard Dennis and the Turtles made $175 million in like 4 years or something like that. Strictly trading futures, breakouts, momentum. But for me, because I've noticed that any time I would take a breakout trade, I was gambling. I had no vet. Tell me how you're going to vet that. There's no way. Or it was like, betting on the come or FOMO. So that's what I'm trying to not do. Absolutely. And the real frustration is when they work. That's probably the most dangerous thing for one of the more dangerous things for a trader is when they make mistakes or they break their rules and it works. Because you've reinforced negative behavior. Yeah, and there you go. Now, the way the bar trade works or the setup is consolidation, breakout, retest, trade in the direction of the breakout. But that's completely counter to my basic trade plan, which is trade in context. And we are definitely long context. Consolidation, and then this crap. But if you want to be technical about it, a higher low, a high. Yeah, it depends on how close you squint your eyes. And there are guys I've heard, talk in various places, primarily YouTube, I guess. It doesn't really matter where you enter. It's like a coin flip. It's how you just manage the trade. If it looks like it's going to go your way, throw it in there and stand back. That doesn't seem to be prudent to me, or that it's really the right business plan, they swear by it. I saw a statistics bit about trading where a guy who sounds like he knows what he's talking about and knows what he's doing did back tested, unfortunately, Forex pairs. So that's, different story, but I don't much use for that. But anyway, he back tested, I think, 5 years of data and had a strategy where he would put an entry on, and then it would, go to, and it was only all in, all out. It was not scaling or any of that kind of stuff. And he, ran the back test for over the 5 years, and the strategy appeared to have a positive edge of like 15%. And then he showed another one where he showed the graph of the back test, similar period of years, and it was a big loser. And the truth of the matter was, they were both the same pair. They were both the same strategy, exactly, computerized, and they were both over the same exact period of time. The difference was 1 minute in the entry. The first winning strategy entered at 8 o'clock in the morning, and the second loser, the other way around. The first winning strategy entered at 8:01 in the morning, and the loser entered at 8 o'clock. Or the other, whichever way it was 1 minute. The difference being, the difference being how small of a seemingly insignificant, uncontrollable variation can make such a huge difference in the backtest results or the outcome or the expectancy of a setup, simply because the first trade, or the second trade, which was a minute off, whichever one way or the other, hit a stop. The first one did not, by just a couple of whiskers, and then it went on from there. Same exact instrument, same exact period of time in terms of years, start and finish, and dates, and exact same strategy. The only difference was 1 minute in entry times, which, latency on your computer, where you are in relationship to the exchange, that's, that's peanuts. I mean, that's not even anything you can do something about, but it really had an eye-opening impact on me. And his contention is that no matter how, looking backwards and doing back testing over typical broker data is a complete waste of time. And that was his example, because this setup has a positive expectancy, and this setup has a negative expectancy of about the same amount either way, 15 points positive, 15 points negative, right? And yet, in reality, they were both the same strategy, the same instrument over the same period of time. The only difference was the entry time by 1 minute. And then, of course, the following entries would change based on the exits and all that stuff. It was pretty interesting, and kind of made you scratch your head and go, "No, okay, great. Now what do I do?" Now the point the goal I'm striving for is to approach trading as a statistical business, serious business, longevity, consistently profitable, that I can rely on in my family, not rather than a video game or gambling. And what I believe to do that requires, and it's not what I thought up, it's what every major successful professional trader I have heard about or heard from all say the same thing, that it is a statistical business, and the whole And the way you approach it is you identify a setup and the specific criteria for that setup, whether it's context and whatever it is, IB high, IB low, IB continuation, whatever. And then you capture by backtest or whatever over as long a data set as you possibly can, a sample set of that specific setup applied to that data set, and you determine statistically, mathematically, after that's over, what the expectancy, Sharpe ratio, all of that stuff, Kelly criterion, might be for that trade, for that setup. If it is, in fact, has a positive edge, then in the live market, that's all done in the homework away from the live market, by the way. Then in the live market, your job is to trade that setup every time it presents itself. And the theory is you're relying on the number of occurrences in a statistical environment and the law of large numbers to manifest to your account and be in the market long enough for those non-random advantageous anomalies to benefit you. And the reason why a long data set or the larger the data set, the more important. You can flip a coin 1,000 times. Everybody knows the probability of a coin is 50-50. You can flip it 1,000 times and end up with, 75-35 and have a string of winners or a string of losers, because that's random distribution, and that you're looking at a small data set. You flip that coin 1,000,000 times and you'll be almost exactly at 50-50. You can do it with random generators. And you're almost you're approaching the true 50-50. But there will still be large blocks of winners, or all heads or all tails, because of random distribution of a random data set. So that's why you do both of those things, and you must be specific about the criteria that validate the entry, because if you vary that at all in your backtesting, then the data set is invalid. You're not comparing apples and apples. Big problem. And this, again, is not just me. This is the most successful traders in the world. Richard Simmons, Paul Tudor Jones, Linda Raschke, Tom Sosnoff, Ray Dalio, all those guys. Mark Douglas, not Richard Simmons, but Mark Simmons, I think. Reliant Fund, Renaissance Technologies. Most successful trader out there, I think, in history. You can see his face. Anyway, so, and also, this is also the theory and the principle behind a casino business. They identify specifically the statistical edge or the expectancy for every game given a specific number of, say, cards or specific rules. And then they trade. Their object on the floor is to take as many occurrences of that game, play as many occurrences of that game as they possibly can, knowing full well that gamblers will win, just like we will take stops. But the law of large numbers will manifest to their account, and it's pretty obvious that it's a winning strategy. So that's the deal, and you can't change up. One of the points that fellow was making about the two different strategies is that may well be a very winning strategy, but if you're only looking at the random data set, where you have a random string of occurrences of all negatives, for example, you may have a fantastically profitable strategy over a long term, but looking at it on a small data set, you'll think it's a big loser and throw it in the garbage. So that's the holy grail for trading, as near as I can see, and what I'm trying to achieve here, which is completely different than I've traded for years. Basically gambling. I mean, looking at breakouts. I think it's going to basically all intuitive discretionary trading without any real plan or setups in mind or any of that stuff. I mean, basic stuff like, breakouts or I guess I've known about IB since way back in market profile days around 2013, 14, 15 in there somewhere. But you know what I'm talking about. I mean, I think it's obvious what I'm saying here. So that's the Holy Grail. Merry Christmas. And there's that stat. So if you were, if you were clever or clairvoyant and you took that IB continuation the second time around at some point, targeting the overnight statistic, you're a happy camper. You're 20 handles up. 36 to 52, not quite. Pretty close. One of the issues I've had with, I started out working with Python, trying to learn Python and backtesting PY and those things, because I would see a lot of different people in YouTube using Python and sharing their code, so you leg up backtesting. And it's, I've done that, and was able to code up my range risk neutral setups, with the typical 2-lot or 4-lot setup and all that stuff, no problem. And 2 or 3 different setups like VPOC migration and IB high, I think, and a couple others. But the problem that I ran into is those backtesting softwares that are available with Python are only for like freaking crypto or Forex or maybe even stocks, not futures, because of the nature of futures being 4 ticks per point and the price per tick. So you don't get any kind of meaningful numbers as far as ticks or revenue out of them to make sense, or at least I couldn't. So that's why I found a thing called Quant Connect, and I've yet to get any traction there. It's set up with futures data, so that's where I'm at. Anybody knows how to do anything with Quant Connect, let me know. And it does use, you do it with Python essentially, and it's not Python that doesn't work well. It's the backtesting softwares that are available, like backtesting PY and I think, can't remember the other one or two. Are not, by the code, you go to Stack and look at the, the details about it, the information and the data and the documentation about them. And they state right up, no, it doesn't work with futures. So we're getting one, two, oops, buckle my shoe, 1, 2, 3, 4 distributions so far. Toothy. Yeah, just go figure, you know. I guess that would be indicative of price discovery. They haven't settled on a value, right? Or I'm not sure that value is the right way to look at what they do, but I think that the market is 99.9% speculation. So, and then there's that element of the higher time frame and the fact that it's a zero-sum game that I mentioned earlier. The old conversation is value, you know, and the object of the market is, or the auction is to seek fair value. I guess the reason I think the way I do, and ask yourself the same question. When you're standing in front of the screens and trading, do you care what the value of the S&P is? Yes. Or do you care that the long you took goes up or the short you took goes down, and for whatever reason? Are you worried about the long-term value? Really? I don't think so. I'm not. And I am sure that there's high time frame people that, you know, primarily the futures market is used for options hedging, I think, in reality. It started out being a hedge for commodities producers to get some stability in the pricing. You know, like a farmer could buy futures or sell futures and know that he had that price guaranteed for his crop. It's so much a bushel. That's how it started. Now I think that the majority of the market is intraday speculation. And we, you know, when I talk about retail, I mean, there's lots of levels of it. I was listening to something of Linda Bradford Raschke talking over the weekend. It's an older webinar, but, you know, she was talking about when she was long 1,200 contracts, and something happened politically and the market went limit down or limit up or whatever else, you know, and she lost $4 million, and she was in the whole $4 million, but traded her way back out of it, or blah, 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 blah. The point is, that's one trader swinging 1,200 contracts. Do the math. You know, we're doing 3 or 4 or 10, whatever. But, you know, they consider 50 to be like we would think about a micro one lot, I guess. And those are retail people. Tom Sosnoff also mentioned something about that. Somebody on the pre-market or whatever thing I was listening to some weeks ago for his Tasty Live thing, which is kind of funny sometimes. Somebody made some comment about millions of dollars or something like that. Oh, it was about the election stuff. He was going to make a $1 million bet on the election, whatever. He said, somebody said, that's the higher time frame. He said, oh, no, absolutely not. Those kind of sizes are just retail. He said, I'll be more than $1 million. So, yeah, there's a whole different world out there that I'd like to be part of, but am not. I'm worried about surviving now. And, you know, Tom Sosnoff again maintains and verbally and out that they are a think tank. Tasty is whatever they call it now, is a think tank. They have a whole squad of computer guys, PhDs and data people, and they are continually doing analysis to find, you know, a statistical edge. Bradford continually into several webinars. I don't know how I got stuck into some of her webinars, because I just, you know, start listening to one and then it starts up the next one somehow on YouTube. continually talking about modeling and data and on and on and on. And of course, Ed Thorpe, that was his whole thing. He was a mathematician, a math teacher, and did the math and worked out that statistically he could beat 21, I think it was, and went to Vegas and did that. And then figured the next big game was the futures market and ended up with a hedge fund. I think it was a hedge fund, billions of dollars. Simmons at Renaissance Technology, same thing. I don't know if Tudor Jones is so much about data analysis, but I do know that I've seen a particular video on the black. He predicted and was short ahead of the Black Swan Monday, whatever day that was. And it was based on computer modeling. And that was even him and the computer guy looking at the spreadsheets, in those days, printouts of the data prior to it. He paid thousands or millions of maybe dollars to get that video pulled down off the internet. I have a copy of it that once I saw it, I saved it off. I think he's given up on that now, but for whatever reason, he didn't want that out there. That's Jim. For some reason, I couldn't think of his first name. Jim Simon. Simons. And Howard Morgan were the founders in 78. Most successful hedge fund in the world. Keep calling him Richard Simmons, is that goofy exercise guy from the 70s or something. I think he just died too, by the way. I don't know. Too bad, but definitely not the guy I was thinking about. Well, if you're a brave, bold, mean reversionist, this is basically a mean reversion trade we've been doing here in this fractal. So outside in would be about here, and then now down outside and back in again, likely. And that's a big likely. There's the sweep. Will that sweep be the fact that there's no more stops down here? This is something Tom talks about, the divergence of these kind of things. Here's 64 stops out, 1. Does that mean divergence? Well, the thing I find with Bookmap is that you can kind of wind this around and it says there's 1 out here, but what's all this about? Now, these are not stops. This is delta selling. Here we go again. So I'm not sure that that makes any sense. However, it would be the way to get on a trade in alignment with context, which at this point is up. Basically, barely. You know, consolidation, what? Who knows? Higher low, higher high, and down here. And then this noise, and now we're doing this. And we've got this distribution, and we're testing the bottom of it. If it falls out of here, we got this one to go. And remember that the POC is way down here in the cornfield. Now, the next thing to look at is, excuse me, where is the POC? It's right here, okay? And it's at 10,969 contracts. So we got a long way to go to have that POC migrate up. Closest thing here is 6,200. 4,000 more contracts just to get it that high. The POC migration being something a lot of people watch and trade. And the theory of it is that it's indicating value is moving in that direction, because the POC is very definitely the most, it may not be the fair price, but it's the most agreed price, because it's the price at which the most contracts have traded. The most people said, I'll buy that, and then another guy said, I'll sell that. So it's the most agreed price, whether it's the fairest value or any of that, I wouldn't say, but, or I don't think that mean that they're synonymous, but sorry, but it is definitely the most traded price. VWAP is, as we all know, the volume weighted average price, and that used to be, whether it still happens or not, I don't know. It used to be if I was a big shot, the hedge fund guy or whatever, and I wanted to move, 100,000 contracts or 10,000 contracts or whatever, I'd call up whoever the hell it is that was going to do the execution for me, whatever company, and I'd say, I want to, we want to buy or sell 10,000 contracts at an average, and keep the price at VWAP or close to it or whatever. And that's supposedly how it used to work. Again, I didn't trade in those circles, so I don't know. I have not traded in those circles. Now I look to get on to a proper physical prop desk twice. We lived in Kuala Lumpur for many, many, many years, 10, 11 years. And I, at one point, interviewed with a guy to get on a prop desk in Singapore. But there was a question whether the work permit could be organized with Singapore. So that, his response was, well, we're going to probably be opening a desk in KL, so just wait for that. And then think, life happens while you're making other plans, right? So then, and another time was here in the States with SMB Capital, which is still a very viable going concern, actual real prop desk. And they have now opened a second one. It's based in New York City, but they've opened a second one in Miami now. But when I did that, they had a futures desk, and that's what I was interested in. And in the middle of the training-y kind of, studying that of course, they sell you to buy. They sell you. The guy who was heading that up named something, I forget what, got canned or disappeared or whatever else, and that was the end of that. And they're still not doing futures. They don't have a proper futures desk or futures focus. They primarily do stocks, and they have an options guy, Seth something or another. Disappointing. Forget that guy's name. I think I heard something. He tried to start his own prop shop, like everybody else, online prop shop thing. I was completely dumbfounded at the money these online prop outfits make. There's one called Apex Trading, and the results of a lawsuit, obviously evidence is made public, right? September of 24, their profits, not revenue, but profits, was $23 million. October was like 15 or 16, and I think November was $8 or $9 million profit. Not revenue, but profit. All off the back of hopeful traders paying $50 or $60 a month for an eval. And now apparently what's happening a lot of times that I wasn't aware of, some of these guys I heard TopStep supposedly put out a letter that they were going to stop this repeated renewing or whatever. People were renewing an eval 10 times a day. Well, Jesus Christ, I mean, I would have never thought of that, but I was really dumbfounded to see how much money these people can make. I mean, $23 million a year would have surprised me. $23 million a month. And that was started by just a ringtail guy that was floating around had a goofy website for a while. And then the next thing I heard about him, he was, a big proponent for Lilu trading. And then all of a sudden the next time shows up with this Apex thing. And boy, he really hit on a winner this time. I mean, good for him. I don't know him, and I don't like any of the rules. I think it's really predatory, but, like your trailing drawdown is calculated on your intraday unrealized profit. Jesus, excuse me? I mean, to me, that's so blatant, it's insulting. But man, there's obviously $24 million worth of people think it's fine. Wow. What an idea. Well, they're sneaking up on my lunch break here. Yeah, I would certainly not have been taking this short. It's counter trend and everything else, which I've talked about a lot. We went through this one. I mentioned about how this was a mini fractal mean reversion, and we fell out of that, and now we've fallen out of this one so far. We haven't completely, because we're not down here yet, but a lot of hocus pocus can happen over the noon hour. And it is now 12:30 on the East Coast. It's 11:30, not 12. It's 12:30 on the East Coast, and it's 11:30 here in Central Standard Time. Now they're getting tricky here with the. We could see a VPOC migration, 10.9 up here. We're now at 84 or close. A minute ago, a little more than that actually. A minute ago it was 4, right? Doesn't take long. Keep hitting this mic with my hand. Hope that isn't making a big booming noise or something obnoxious besides my voice. And I will point out that there is not one possible opportunity given my range requirement. 57 to 52 there was, but we never got there, right? Here's our high. 1, 2, 2.5. That's kind of, if you squint, you might say 3. That might have been 2, nothing. 1, 2, all the way down. Ridiculous. Pretty frustrating. Pretty darn frustrating. Now, if you want to think about this in terms of market profile stuff, here's yesterday, RTH. This is all RTH now. Okay. Here's today. Our value area is almost, it's actually overlapping top and bottom from yesterday. And we have kurtosis to the top upside and basically cut off or a interrupted auction at the bottom. So it's very likely before this day is over that we'll come down here and put some bottom end on this thing. That's yeah, that'll be something to watch for. Can you take advantage of that? Could I trade it? Would I short right here? No, because the context is up, and I don't. One of my rules is not to trade against, not to counter trend trade. Picking tops and bottoms. You want to be with the advancing army or the desert, the people who are retreating. So that's a basic tenet of my philosophy trading plan. But just in terms of, the overall concept of trading and auction and all that stuff is typically you have kurtosis of distribution or excess, whatever you want to call it, at both ends. I mean, look here in the market profile. You see any profile that's just flat across the bottom? I don't. So there you are. There you go. Maybe not a fun fact, but, something interesting to watch. Well, I, I guess the reason I keep looking at this lower end is this is the closest I'm going to get to a range requirement, which is the VWAP to VPOC trade with the IB high in the middle. I'm going to shower and lay down. All right, I'm going to step away for the lunch deal here. Let's see if the 12-to-1 story sets itself up. And I'll be curious to see if they look lower. Again, remember that we have exactly a flat bottom, and there's a whole confluence of stuff down here at the bottom. And we've got the, well, let me do this differently. We've got the value area low, ETH low, developing value area low, IB low, all right down here at the bottom, and there's no taper. Now, it does look a bit tapered on this volume profile as opposed to how it looks on the IRT charting here. But it was, suggest to me that we'll get down here and take a look at all that stuff to get some taper on the bottom side of this, or at least complete the auction. You'll notice that there is none of these previous market profiles. And if you go back a long way, same story, flat. Maybe not today, but, So anyway, I'll be on the side here for a little while, or off the keyboard. I'll put on the Be Right Back music here, and there we go. Trade safe if you're trading. right, what'd they do? Well, it took off at the top. Huh? Okay. There you have it. So we have 1, 2, 3, 4, 5 distributions now. And a string of singles here. So what was that? 1,300. Oh, that was the bond auction, I guess. So much for my flat bottom theory. Trade what you see, not what you think, right? But it will be addressed at some point. No question about it. They always are. What they're doing now is popping up here for this old MCVPOC from the 11th of November. That's a 26 or 66 quarter. That would be right here. Where am I? Right there. And that is, I don't know why this outlier here definitely took that out. I don't know why. Rod's got it running all the way across. Anyway, as far as I'm concerned, it's been revisited. Wow, excuse me. It's been revisited, but and it's also right up at the highs, right? So, and if I'm not wrong, just above here is the all-time high, right there. There's the all-time high period at 80, and that was put in on 6th of December. A lot of liquidity up here. See how the shading shows it? And a naked volume point of control here from. No problem. That's great. Hey, baby. You see, see the naked volume point of control here at 66.25. And where am I at? Over here. There we go. Okay. Got to give this some serious thought here now as to just what the hell I'm going to do. I had sized down my package to the 2 lot. Didn't really, of course, have to be mindful that today wasn't a day that I thought was particularly good for trading. May jump down to micros, which is the only way I can go down. I have to maintain the risk neutral package, so the minimum contract size is 2, right? So in order to get smaller, size back at all to reduce risk and get out of this paralysis by analysis funk, the only step I can do size-wise or risk-wise is, besides being extremely careful and disciplined about taking only vetted trades, the only way I can size down risk-wise per trade is to reduce the value of the package. And the only way to do that in the ES market is to go to the micros. So I'll have to give that some thought. And power hours here in a few minutes. 7 of them. Well, this is kind of obnoxious. But it does definitely. There's another naked VPOC which has definitely been hit. really light volume. 796,000 contracts. Normally we're well up over a million and change, 1,000,002 or 3, I think. Stand by. Let me see my little thing here. Yeah, 72%. This is a little some tools I have. This is relative volume for the RTH session. Normally we're trading about 891,000 contracts average, but at this point in time in the day, in the session, we're at 664.8, so we're only 72.6. You know, well, are we going to get into this string of singles and go do something? I think the chances of us going all the way across the whole entire range to put some excess on the bottom are slim and none. But you never know. There's no more numbers or anything. Well, the Fed balance sheet was. Yeah, the Fed balance sheet was 1,300, sorry. And it was the 20-year bond auction at noon. So I didn't remember that right. The point of the story is there isn't any more news out today, and I guess no press conferences or whatever else. And of course, there could always be some unannounced thing. That's always a likelihood. I got to remember to mute that damn mic. I hope I haven't been noisy in the background. It'll be interesting, though, to monitor it to see if any of the background noise from the house, my wife talking to the cat or whatever else, So I don't think so. But if so, I apologize. Well, we're at the string of singles. Now what the hell is what's going to happen? I certainly wouldn't be a brave enough boy to throw a short out here, but what the hell, you never know. Once again, my context or my trade rules are trade in context, in line with context, which is north, pretty obviously. Here's the day's trade. There should be no question in anybody's mind what direction we've been going. And there isn't in mine. So higher highs, higher lows, higher highs, pullbacks to get on, I guess. This would have probably been a get on right here when we came down and tapped into the VWAP mid and everybody else. This is the RTH VWAP. The dots are the mid and the red is the mid and the dots are the full session or the Globex VWAP. I think. I don't remember. I got to look, actually. I don't remember. Typically, I have the colors more differentiated than that. I guess it is, and I'm just not seeing right. These are both the same colors. I try to keep colors consistent across my system so I can, look at everything. One of the problems I have with looking at other people, they throw a snap up is I'm all confused. I don't know where the hell the IB is or the VWAP or anything else because because they've got the colors all different than I do. So here's the Globex, there's the RTH, and here's the mid. VWAP, mid. Pretty simple. Green, IB. The rest of them are however they come out. I don't really set these colors particularly. I didn't really set those colors particularly. I kind of tried to align them a little bit, but so I could differentiate just by looking at them. I didn't give it a lot of thought, though. Damn, it's 1C here today. Depending on where you are, that's about 33 degrees, I think. 34, 33, something like that. I'm pretty overcast, so there's been no, which is good for night because then that heat won't radiate, but during the day it's nice to get a little sunlight and warm things up. Get some residual heat retention so you do have some heat to radiate. Yeah, I have no clue what I would say here other than I will watch because I'm not going to be a fool and succumb to frustration of not taking a trade again to jump into something at 14, 13 on a light volume day against context. No, thank you. All right, I'm going to step away from the keyboard here for a few more minutes and go. Do a couple of things outside before I go get our daughter. It's freaking freezing out there, Mr. Bigglesworth. All right, so we are getting into that string of singles. Sorry, I was just outside and it's 1C. Okay, what am I thinking about here now? Well, we are at 28 past the hour on past the power hour time. And we've got 32 minutes to the cash close. We'll have the market on close order report at 1450. Yeah, here we go. And so frustrating, you know, that the only time, well, actually, no. Right here, there is a range requirement, but it's in contrast, or it contradicts my trade plan of not trading counter trend. I was going to say that from here down, but, you know, that's picking a top. That's about the dumbest. Or I should say probably the least probability for long-term success is picking tops or bottom. So there we go. Down to developing value area high. Something red living back here. I don't know what. Oh, that was the that was the ETH or the EVPOC. That's the POC from the overnight. Right behind this developing value area high now. Real frustrating. Real frustrating. Oh, good timing, huh? Buddy, you want to get up here? You want up here? Yeah. All right, now what? Oh, there we go. Boom, bam. So somebody's feeling like a rock star that Got a hold of that one for 4 points, and now they're riding it up. I suppose that should have been something I was looking for, instead of out dealing with the garbage. Jesus. Timing is everything, isn't it? Timing is everything. And mine seems to suck lately with a capital S. Capital UCK. Yeah, so anyway. Well, that was, if you want to be real analytical about it, that is a bar. What we've had here is a long consolidation, a breakout, and a retest. The theory would be short. if you were not, didn't have a problem going against the context and the time of day. But that would be my definition of a bar trade, of a bar setup anyway, which stands for breakout and retest. And that would be okay if you shorted right. You short right here, you're scaled. And then after that, it doesn't matter. It's just another trade. That, in my opinion, is the genius of the risk neutral trade setup, risk neutral package. The second that risk neutral scale is off, the worst you can do is scratch, unless you're a moron and move your entry or your stop away from your entry. Why would anybody do that? I don't know. And then the only other option to a scratch is succession of profits, T2, T3. So and that, just from a psychological point of view, I think that's huge. For me, anyway. And remember, this is my virtual trading journal. So the point of this exercise is I'm me talking to myself. I wouldn't have to do any of this if, because Bookmap, as I've said more than once, I think, recently, they record every tick, every movement, and everything that you do on Bookmap. But, and all, order lines and all that stuff, but they don't copy the voice or audio. And obviously they don't pick up anything off IRT. So it's kind of I think it's a more comprehensive approach here. And OBS is free. So, how tough can it be? Well, here was our little sojourn through this string of thin stuff here, string of singles, if you want to call them that, which is an old market profile term for a situation like this, where there's just a bunch of single prints in a row and they go blasting up through there. Or here, actually. But anyway, context is up. We have 1, 2, 3, 4, 5 distributions. No excess on the tail. So essentially what's been happening, if you think about it, well, they've been auctioning. They tried to auction lower and nobody liked it. Nobody was interested to do business. So they keep auctioning it higher and higher until pretty soon they find out that nobody wants to do business up there, and then they're going to come the other way. Basically, they call that, as in a trend day, they call that price discovery. Looking around for where people want to trade. Now, at the moment, this is still the POC, clear down here at 34. That's a long way down there. Something doesn't look right here either. Oh no, it does too look right, yeah. Here's the POC way down here, 34 quarter or 34-ish, yeah. So I'm not saying in a million years that it's going to get down there between in the next 18 minutes. But now if you trade the ETH, depending on where they open it, this is not a statistic. I don't have any data. It's just one of those, that's interesting. I've seen that a few times. It seems like the ETH trade very, very frequently comes back to revisit the previous POC. Even last night, that happened. As recent as last night. So, and that's something that I would really like to get this back testing and all of my coding or something up to speed so I could find that stuff out for myself, and be confident of it. Yeah, okay, I'm going to put a trade on up here because, blah, blah % of the time, the overnight trade goes down and revisits that POC. That's the whole thing to do in statistics. There's that POC down here on the book map. Boom, right there. And both of them are still there, which is interesting. This is both POCs lined up now. And they've been down there for a long time. Pretty much the whole damn day. Wow. I mean, here are the migrating VPOCs, and you don't see anybody up here. That's why I like those flags. That's pretty crazy. I don't think I've ever seen that before. Wow. That's so crazy. I'm wondering if my data's off. That's pretty amazing. I mean, No sooner did I type that it migrated. Well, that's pretty funny, huh? I just typed that in static, went out, got a glass of water, and there we are. Pretty funny. Well, not funny, haha, but that's the way the cookie crumbles. And that was, I guess, on that bump. Ooh, yep. Right on the market on close orders. That's pretty funny. Well, that's pretty amazing. It has not, though, on IRT yet. Notice IRT is still down here. And it very definitely will in the next 30 seconds because there's 10,960 and we're at 11 up here. So that was the migration. Remember what I was talking about with the delay in update? So we'll see what happens. I think Bookmap's pretty accurate about those particular things. Seems like their levels are pretty accurate. My IRT's been way off according to this. What the hell is going on? Sick of that son of a bitch, and it's supposed to not be in there because I have it in the filter list. Annoying as hell. All right, 55. 5 minutes to the cash close. I will end the stream at that point as usual and be back up at 0800 in the morning for the usual falderall and pre-market numbers, those things, trying to maintain a sense of, or not a sense of, but trying to maintain a process. IRT is still arguing with this thing. Now, just now, IRT has migrated, and you can see that it's happened there. Oh, sorry. You can see that it happened here, the developing line. And here we are over here. Okie dokie, we're narrowing down on that 1500 mark. So this was quite a nice outside in here rotation. If they take it up to the top, it'll be even sweeter going into the close, right? That'll be essentially 10 handles. And that would have been the trade in the direction of contacts. So that would have qualified for me. And it would have been a lot of stuff. And I'm standing here not thinking right. It would have been a VPOC migration. It would have been within range, range requirement. And it would be in the direction of context. So yeah, that would have been. But it would only have been to a scale. So basically, I don't know. Let's see, scale. Oh yeah, it would have only been scale and now coming back in its face. Not that that's anything wrong with that, but I'm standing here completely missing the whole picture. All right, so it's 1500. It's off to the school run we go. And firing back up at 0800 in the morning. My screens and stuff go off at 1600 and back on at 1700, obviously, when the market and the sessions reopen. But as far as the stream's concerned, this is 7 hours is probably long enough. Every once in a while I see see a red thing. That's gotta not sound very good. Must get too close to the mic or something. I thought I had that all balanced out in a. I thought I had that. That's with a whatever you call it, filter thing of some type that caps it off and doesn't let it get any higher. Have to check that out. Maybe something's changed with an update or something. Anyway. Okay. All the best. The stream is coming.